This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do.
3 for 3, the Dow, NASDAQ, and S&P 500 all hit new highs. But that Dow 20,000 mark remains oh so elusive. So with stocks at record levels, what's next?
Show me the money. Job growth slowed to end 2016, but worker paychecks grew the most in 7 years.
And Safe Swim, how one man hopes his surfer's bracelet will cause sharks not to take the bait. All that and more on Nightly Business Report for Friday, January 6th.
Good evening, everyone. Welcome. A triple play on Wall Street today with all three indexes hitting new highs after today's jobs report. We'll have more on that in just a couple moments. The NASDAQ, the S&P 500 closed at records, while the Dow came tantalizingly close to that 20,000 mark. In fact, it was just a third of a point away. And to put that into perspective, the index was 5 cents. Yep. 1 nickel away from that 20,000 milestone, but in the end, the Dow couldn't break through and had to settle for an intraday high. So here's a look at the numbers for you. The Dow rose 64 points to 19,964. The NASDAQ rose 33. The S&P 500 added just about 8. Bob Pisani has more.
No Dow 20,000, but we did get a triple record day. The Dow Industrials, S&P 500, NASDAQ, all record highs. What moved us up today and this week were two groups that were strong after the election, but have lagged recently. Bank stocks like Goldman Sachs and JP Morgan, and industrials like Boeing and United Technologies. One disappointment, oil stocks, Exxon and Chevron were down this week, even though oil remains near 18-month highs. Now, the report of that terrible shooting at Fort Lauderdale Airport mid-afternoon did not cause any big selling, but it did likely, understandably, dampen any buying interest. Now, the markets have been essentially sideways since the Trump rally ran out of steam in mid-December. Investors are hopeful that when earnings season kicks off next week, corporations will give positive guidance for the 2017 earnings outlook. Stocks have already moved on that hope, so a lot is riding on the outlook for this year. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Let's turn now to our two guests for their perspectives on the markets. We're lucky to have with us tonight David Leibovitz, a global market strategist at JP Morgan Asset Management, and Jack Ablin, Chief Investment Officer at BMO Private Bank. Welcome to both of you. We've got a good long stretch here where we can really get into stuff. David, you say you believe that there is still upside to equities in 2017. Jack, I don't know whether you say that or not, but you do say that you think the S&P 500 will be lower a year from now and that there's too much good news built into the market. David, make your case, and then Jack, rejoin.
So we do think that there's upside in 2017, but what I would say is that that upside, for the most part, is really dependent on the ability of corporate profit growth to reemerge after being, relatively hidden for the better part of the past 2 years. So, multiples feel a little bit stretched. It does feel like there's a lot priced into this market, but it feels like earnings growth is coming back in 2017, and as a result, we think that equity returns will mirror those of the cash flows that the stocks are generating.
Jack?
Yeah, I would agree. I think there's a lot built into expectations. Analysts as a group are expecting profits to rise 13.5% in 2017, and that's a bit of a stretch. I think that, and that's currently built into to prices. So one of the things I'm going to be watching for is this current earnings season that just started a day or so ago to see, how much momentum are we going to have going into 2017, and will these margins, predicated on tax cuts and regulatory rollbacks be offset by higher interest costs?
David, there are a lot of people who do feel that the rally after the election is maybe getting a little thin, and that the expectations, and Ty has made this point a number of times, the market seems to be thinking that everything that's on the new administration's agenda is going to get done quickly. It's all perfect. I mean, that may be the case, but if it's not, Is that going to put a chink in this market?
So I would agree with you that the market is engaged in a little bit of wishful thinking right now. I've been telling clients that the stock market is pricing Donald Trump bowling at 300, right? Everything going exactly according to plan. We forget that at the end of the day, we are talking about Washington. And even if Trump starts to try to take action on day one, best case, we start to see some of this stuff come through in the second half of 2017. I would add it's going to be far easier to make progress on tax reform than it is on infrastructure spending or deregulation. So I would agree. There's a lot priced into this market right now. And unfortunately, we're just going to have to wait and see what actual policies look like next year.
Jack, I know you had your eye, we spoke earlier today, on one measure without getting too technical. It's the price to sales ratio of the stock market right now. And you see it as stretched as it's been since the tech bubble. Explain it in sort of freshman economics terms for me and why you're concerned about it.
So you have prices, the price of the market, and you have sales. And you essentially just look at the total number of sales outstanding and compare to the price. And right now, prices are trading at roughly 2 times revenues. On average, if you go back to 1993, we normally traded around 1.2 times revenues. The last time we were at or above 2 times revenues was 2000, was the tech bubble. And so I do worry that at least from that perspective, we are a bit stretched. I will say, though, keep in mind that when I'm looking at revenues, I'm looking at trailing revenues. I'm looking at the last 12 months, and a lot of what's baked into this market is hope for the next 12 months. So it's possible that if we do get a big ramp up in revenues, then that 2 times goes down some. I don't think it goes back down to 1.2, though.
So, David, if you do see opportunity in this market and things get done in Washington, like the market anticipates they will, where do you see the best opportunity?
So we like the more cyclical parts of the market relative to the more defensive parts of the market. The one thing that I'm most certain about for what will happen this year is that interest rates will head higher, whether that comes from an increase in the deficit, more inflation, better real growth. The bottom line here is that I think rates are headed up. So that should be good for things like financials. We also like technology and we like consumer discretionary, but we like consumer discretionary with a bit of a caveat. We like discretionary as long as wages are growing faster than inflation. But if for some reason that relationship flips on its head, then we see consumers losing purchasing power, and we're not quite as optimistic on those stocks. What we're staying away from, again, are the defensive. So the staples, the telecoms, and the utilities, which have a high sensitivity to interest rates, and as we saw going into the end of 2016, came under quite a bit of pressure when rates rose.
Jack, 30 seconds. Where should I take profits now if I've got some? What should I do quickly for 2017?
Sure. I'm not looking for a plunge. In fact, there's a lot of cash on the sidelines ready to step in if we do pull back. But I would say, if you've got profits in S&P, U.S. large caps, that's certainly not a bad place to take. I would redeploy it in cheaper markets and emerging markets. If all we have to do is tread water sideways, and I think emerging markets does well. It's if we get a cold and start to head down, the emerging markets are going to go the other way. But like I said, there's a lot of cash on the sidelines.
Gentlemen, thank you very much for your insights tonight. David Leibovitz with JP Morgan Asset Management, Jack Ablin, BMO Private Bank.
Hiring slowed a bit in December, but wages rose to end the year at their fastest clip since 2009. Average hourly wages rising a dime last month to $26, and that brings the growth a tick under 3% for all of 2016. And as for jobs, the economy added 156,000 in December. That was below the expected increase of 178,000. The unemployment rate rose by a tenth to 4.7%. The report was the final one under President Obama and represented the 75th straight month that employers added jobs. And as Eamon Javers tells us, it set the bar for the new administration.
The jobs number came in a little lighter than expected today, with the most robust sectors being employment and healthcare, which added 43,000 jobs, and social assistance, which includes home rehab workers and daycare employees, adding 20,000 jobs. Food services and drinking places added 30,000 jobs, but other sectors saw job losses, including mining and logging, construction, and information, which includes book publishers and the media. Average hourly earnings increased by 10 cents to $26 after edging down in November.
the wage growth is the best wage growth we've seen in the recovery. So that's the most important part of this report.
The release marks the final jobs report of the Obama era, in which the monthly jobs announcement became a political football as the country struggled to emerge from recession.
Where are the jobs?
The American economy has now created in the private sector jobs for the past 21 months in a row.
Where are the jobs?
Business once again added jobs for the 30th month in a row.
Where are the jobs?
This is the strongest job growth that we have seen since the 1990s.
That had officials in a reflective mood today.
8 years ago, Elaine Chao was here telling the American people that we'd lost almost 800,000 jobs. You know, the unemployment rate was heading toward 10%. The economy was in the tank. Here we are now. The unemployment rate's 4.7%.
But Speaker Paul Ryan posted a GOP message saying after 8 years of Obama's economic policies, too many Americans still do not feel better off. So how does Barack Obama stack up against other recent presidents? Ronald Reagan created nearly 16 million jobs. Bill Clinton, nearly 23 million, was the highest. George W. Bush, just over 2 million. And Barack Obama created over 11 million jobs. Obama's total is the bar that the next president, Donald Trump, will likely try to beat in his 8 years in office if he gets them. This week, Donald Trump tweeted that Ford's decision to create 700 new jobs in the United States is just the beginning. Much more to follow. For Nightly Business Report, I'm Eamon Javers in Washington.
On the same day Congress certified Donald Trump's electoral college win as president, the nation's top intelligence officials briefed Mr. Trump on their findings on the investigation into Russia's hacking attempts to interfere with the election. In a written statement afterward, the president-elect praised the intelligence community, called the meeting constructive, but did not embrace the conclusion that Russia and Russia alone was behind the cyber meddling. He also said it had no effect on the election's outcome. Mr. Trump also plans to appoint a team to come up with a plan to combat cyber attacks within 90 days of taking office.
And the president-elect also said Mexico will reimburse the U.S. for the cost of building a border wall between the two countries. After a report last night saying he will ask Congress for money to build the wall as soon as April, Trump tweeted this morning, quote, "The dishonest media does not report that any money spent on building the Great Wall for the sake of speed will be paid back by Mexico later."
One area that is looking to hire right now is the U.S. Border Patrol, but it's struggling to do so. Kate Rogers is in Artesia, New Mexico, to show why the agency's having such a tough time finding recruits.
If you're looking for a challenging career and have a desire to serve and protect, look to the nation's borders. The U.S. Customs and Border Protection Agency is actively recruiting.
We're looking for men and women that really have an innate set of core values, of honesty, of integrity, of dedication, of respect.
The agency needs to bring on around 1,700 new Border Patrol agents in the near future to help protect 6,000 miles of the country's land border and more than 300 ports of entry. However, many job applicants don't make it past the initial screening process.
It's hard to get in. We expect a lot out of you. For every 175 that apply, one Border Patrol agent gets hired.
Among the agency's other challenges in recruiting and retaining, the job is dangerous and often requires agents to deal with harsh terrain and weather conditions and relocate to remote areas.
Generally, we're not in major metropolitan cities, and that can be a negative aspect for some folks, but I think that the mission that we have outweighs that.
New agents like 23-year-old Jose Ramirez attend the training academy in Artesia, New Mexico for roughly 4 months. They're recruited from different backgrounds, and prior law enforcement experience isn't necessary. For Ramirez, it's a chance to serve the country and continue the legacy of his older brother, who died in the line of duty.
Being here at the academy is a challenge, but I know that every step and everywhere I am, I know my brother's footsteps were there. So every time I come to a struggle or anything, I think of them. It helps me get through.
Trainees get full board and their pay begins at around $50,000 a year, but the training process is rigorous. I spent the day at the Border Patrol Academy to find out what it takes to prepare for the dangers and complexities of becoming a Border Patrol agent.
New agents learn the law and how to process legal and undocumented border crossers. They practice arrest techniques and go through demanding fitness training. They learn Spanish to be fluent by the time they graduate, and trained driving off-road to be ready for the southern border's harsh terrain.
Have a big pit down there.
They also get combat training.
Yep, extend the right hand to the neck. Yeah, give it to him. Give it to him. Harder, 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 harder. Now throw him. Now throw him.
And have to be ready to fight in the dark.
Got the arm. Got it. There it is. Now deliver. Good, good, good. Now throw him to your right. Throw him to your right. Step back. Excellent.
Water safety is also a must, including climbing Jacob's ladder,
You can do it. You're right there.
dangling 25 feet in the air, and being ready to take the plunge. For Nightly Business Report, I'm Kate Rogers in Artesia, New Mexico.
She's such a good sport. Coming up, why this week's Market Monitor thinks staying domestic might be the best thing for your portfolio this year. Boeing misses its target for new orders in 2016, and that's where we begin tonight's market focus. The aircraft maker said it received fewer orders last year, just 668 of them. The company hoped that number would match all of its total deliveries, but it didn't. It was Boeing's weakest year for orders since 2010. Boeing shares finished the day, though, up 39 cents to $159.10. Greenbrier Companies posted lower profit in sales in its latest quarter as the maker of railroad freight car equipment cited fewer deliveries and a challenging operating environment. But the company reaffirmed its guidance for this year and declared a quarterly dividend of 21 cents a share. Shares soared 16% to $46.70.
Goldman Sachs added Fiat Chrysler to its conviction buy list and raised its price target to $17.50. Evercore also said it was bullish on the automaker, raising its stock rating from sell all the way up to buy. Both financial firms cited Fiat's ability to reach its profit targets. Fiat Chrysler shares rose 6% on the session. They finished at $10.42. And late last night, a federal judge ruled that Amgen's rivals Sanofi and partner Regeneron infringed upon Amgen's patent for its cholesterol treatment. Under the ruling, Sanofi and Regeneron are banned from selling their cholesterol drug. Amgen shares up 2%, 156.78. Shares of Sanofi and Regeneron were lower, as you see there.
Our market monitor likes domestically oriented stocks, and he has names he says are poised to take advantage of faster growth here in the U.S. this year. The last time he was on in June, he recommended the CME Group, which is up 23%, TD Ameritrade, which gained 52%, and Schlumberger, which is about 8% higher. Joining us is Michael Muscio, portfolio manager at FBB Capital. Welcome back, Michael. Nice to see you here.
Thanks for having me.
And you like the financials. Let's get right to your pick. PNC, sure. You say, has basically a great plan for new growth.
Yeah, so the company is a regional bank, right? So not one of the big money centers, but a regional bank that has a plan to expand their footprint. And that footprint is a branch network on the East Coast that is moving west and south and most focused on domestic revenue and profits, which is what we like in a rising rate environment. And rising short-term rates should help them in terms of profitability as well.
And it's a bank that actually does banking, right?
That's right.
It's really a banker's bank. Extra space storage. Who wouldn't want extra space?
So this is for the folks who have more stuff than they do space. This is the second largest.
You're talking to me, Michael.
Yeah, that's right. That's right. This is the second largest self-storage real estate investment trust. A little bit smaller, only about a $10 billion market cap, but they pay a nice dividend, and the leases are actually relatively short-term, Tyler, like around a year. So as rates rise and inflation rises, they're able to reset those rates, and we think that they're going to benefit from that going forward in a rising rate environment.
And your third is a play on energy, a specific niche of energy, though, Enterprise Products Partners LP.
Yeah, so Enterprise is a pipeline company. We think it's kind of has one of the cleaner balance sheets of the pipeline companies. They're branching out into some other areas of storage and transportation. But again, a healthy dividend, a solid balance sheet, and 100%, almost 100% domestic revenues. And again, in a rising rate environment going forward, it's better to be home rather than abroad with revenues.
Let's get your thoughts broadly on the market on this day where all three of the major barometers hit record highs.
Yeah, I mean, we can call it 20,000, can't we, Tyler?
I think we can.
I mean, inside of 1 point, pretty impressive. But some of your other guests had talked about, getting actual policies passed, and I think we're factoring in some positivity that is yet to actually come through. And I think the sales comment going forward in terms of price of sales is key as well. We really haven't seen sales growth in the market writ large. That's why we like to stick a little bit more toward individual companies that we think are growing in a relatively low growth environment.
All right, Michael, thank you very much. Michael Nucio with FBB Capital. Coming up next, how one entrepreneur hopes to give a whole new meaning to the phrase jumping the shark.
We seem to hear more and more these days about shark attacks, whether here or in Australia or anywhere. Scientists believe that's partly because more people are spending more time in the water than ever before. Surfers are the victims of roughly half the attacks here in the U.S. And that's why one California surfer decided to develop a device that he believes can reduce the chances of a shark attack.
If you lived through a shark attack like Nick Volunas did in 2005, you've surely got quite a story to tell.
I was taken by the foot and ankle. External stitches here, and the actual force of the shark pulling me under is what broke my ankle.
Friends took Volunas to a South Carolina hospital. He needed about 40 stitches and 4 months to heal.
Considering foot's still there, I can still use it and surf with it. Yeah, very fortunate.
Now he lives and surfs in California, near a childhood buddy, Nathan Garrison, out in Santa Barbara. Garrison wasn't there when the attack happened, but it haunts him to this day.
We've been spooked a few times by sharks, or we thought we've seen them. Maybe saw a fin, maybe saw a tail.
So Garrison set out to develop a wearable device to deter shark attacks.
It had to be simple, it had to be affordable, and it had to be stylish.
But how exactly would it work? In 2012, Nathan's father, David Garrison, did some research and came upon Shark Defense, a New Jersey company run by scientists who, back in 2006, discovered that sharks are extremely sensitive, believe it or not, to magnetic waves. Sharks have a network of gel-filled black dots on their snouts called ampullae of Lorenzini, so sensitive that they pick up weak electrical signals produced by muscle movements, even the heartbeats of their prey. The ampullae act as electroreceptors, sensing magnetic waves and sending information to the shark's brain about electrical activity. When sharks approach a person wearing magnets, they sense a stronger than normal magnetic field, unpleasant enough to make many sharks turn and swim away.
It's like you get blasted in the eyes with a super bright light in a dark room. So it's uncomfortable, it's unpleasant, but it's not harmful.
David Garrison got a first-hand look at the technology with Patrick Rice, a marine biologist who worked with Shark Defense. Garrison, having reviewed some of the 15 research studies on the science, was so impressed he licensed the magnet technology from Shark Defense, agreeing to pay a percentage of future sales for a shark deterrent made by a new company he and his son formed, named SharkBands. Nathan Garrison got busy. 4 months and about $50,000 later, in August of 2014, he and his dad joined Rice in the Bahamas to test a prototype. Nathan, having never seen it work in person, was going to shoot video underwater with sharks swimming nearby.
Oh, I was nervous. And we're looking at each other like, was this really a good idea?
Garrison's video shows Rice wearing SharkBands, and he's safe. On another trip, a dummy, Bernie, they named him, wore SharkBands, his legs stuffed with bait. Garrison's video shows sharks appearing to avoid Bernie. When SharkBands were removed, a shark took the bait. To be sure, there's still healthy skepticism about the science behind SharkBands. Garrison admits his product is merely a deterrent, that it won't stop a hungry shark if it really decides to attack. Last week, a Florida teenager said he was bitten by a shark while wearing SharkBands. He says it happened after a wave knocked him off of a surfboard and that he may have landed in the water near a shark. The teen took more than 40 stitches but is expected to fully recover. Nathan Garrison, who knows of no other such incidents, stands by his product, emailing Nightly Business Report to say, quote, Ultimately, shark bands are like any safety device, designed to reduce the risk of injury, but never 100%.
If I could create a device that would even make me 10% less likely to get attacked, then why wouldn't I wear it?
Interesting point. Scientists still researching the science behind shark bands, and there are other types of deterrents, of course, on the market, some of which use chemicals. Still, more than 35,000 shark bands have sold in a little more than 2 years.
Well, before we leave you tonight, let's take a final look at this record-setting day on Wall Street. All three indexes hitting new highs. The Dow rose 64 points to 19,964. The Nasdaq rose 33, and the S&P 500 added just about 8.
Okay, my Packer fan.
Oh, gosh, that's right.
I got the Giants, you got the Pack.
I got the Pack.
I'll see you Monday.
You got it. I may be wearing a cheese head. You never know. That's Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Have a great weekend, everyone, and we will see you Monday.
Or maybe you'll be wearing the cheese head, depending on who wins.
Nightly Business Report has been funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do